for our approvals. I should have said this yesterday, but slightly belated happy birthday, number 29 to Christelle. Thank you. I hope you enjoyed your evening. And clearly we gave you 3 gifts. The approval packages were for 3 different items. We're going to start off with the project proposal for the 500th series. I see not the project. See, I told you this is where my the targeted standards in the 500 series. Sorry about that, Jasper and team. So I'm going to blame it on the cold medicine right now. Over to you.
Yeah, thank you, Tom, and good morning, everyone. So indeed, on Tuesday we discussed the project proposal for revisions to the ISA 500 series, and today we're gonna discuss 4 selected topics with you. 2 relate to ISA 501, related to inventory, and 2 relate to ISA 505 on external confirmations. So the first topic we will discuss today is the alignment of ISA 501 with the concepts for identifying, assessing, and responding to risks of material misstatement, as they are included in 315 and ISA 330. The second topic today that we will discuss is the inventory under the control, under the custody, of a third party. And then the third topic is negative confirmations, and then we're ending today with the fourth topic, which is considerations about the need to perform external confirmation procedures. So we will do this together as a team. So Natalie will take up the first topic, Henk the second and the third, and I will do the last topic with you.
I'm not totally wrong though. We're gonna advance the approval of the project proposal to at the end of your presentation.
Yes, that's correct.
I'm only partially wrong.
So all of the proposals today, they're informed by a lot of outreach and also engagement with you and the project board members. So on the first one, so we went to twice, as you're aware, to the board meetings in June and December of last year, and we took your input, and that we used that for to come to our views and recommendations. This quarter, we had several meetings with our project board members, which are Greg and James. So they also provide us with a lot of useful input on our proposals. So thank you for that, Greg and James. And then, of course, we did a lot of outreach done. The outreach, most of it was performed last year and was presented to you in December. So if you want to go back to that paper that we presented to you in December, there's a lot of information on what we've heard on these 4 selected topics that we're bringing to you today, but also the other topics that we will discuss with you in the upcoming board meetings. Then in addition, of course, to that, we also did the outreach in the first quarter of 2026, which I highlighted to you on Tuesday, so I won't repeat that, but it was the outreach with the JSSs on these selected topics as well, and then with users of the financial statements, those charged with governance, and preparers. So for each of these topics, the team will also highlight what the feedback was that we received. And lastly, before we go into the first topic, I'd like to highlight the S&P AG letter. The S&P AG letter, they had a comment on the topic of mandating external confirmation procedures for certain account balances. They were not in favor of the proposals from the project team, and then our proposal was that to require auditors to explicitly consider whether external confirmation procedures should be performed for certain account balances. They were of the view that this is already sufficiently addressed by ISA 330, paragraph 19, and they actually question whether anything else is needed in this area. We'll get to that topic later today, but first now I'll hand it over to Natalie, who will guide you through the first topic.
Thank you, Jasper. Good morning, everyone. So the first topic to discuss today covers the alignment with the concept for risk assessment and risk response for audit of inventory in ISA 501. So I just want to clarify that the topic today doesn't cover the attendance at inventory count. That will come later in June. So the intention here is just to discuss the conditionality to apply requirement in paragraph 4 and 8 of ISA 501. So in the current standard, the conditionality to perform the work required by paragraph 4 and 8 of the standard is based on materiality. So inventory or inventory under custody and control of a third party that are material to the financial statements. So that current conditionality lead to the identified issue that ISA 501 may not be sufficiently aligned with the more robust risk identification and assessment process in ISA 315 that was revised in 2019. So with that identified issue, we have a proposed action in our project proposal that is to determine the appropriate revision to inventory in ISA 501 to align with ISA 315 revised in 2019 and propose ISA 330 revised. So the proposed action is supported by the stakeholder feedbacks that clearly highlighted the lack of alignment and the inconsistency with the risk assessment standards, and the need to reconsider whether conditionality should be driven by assessed risk of material misstatements. So based on the stakeholder feedback and to address the inconsistency of ISA 501 with the risk-based approach, the project team recommends replacing the materiality-based with the risk-based conditionality in both paragraphs 4 and 8 of ISA 501. So that approach would provide a strong and direct response to stakeholder calls, and this would clearly link the requirement to perform specific audit procedure to obtain sufficient appropriate audit evidence regarding the existence and condition of inventory in response to an assessed risk of material misstatements, and doing so reinforcing the ISA's risk-based approach. So that approach is also in line with the removal of paragraph 18 in proposed ISA 330 revised. So to fully align with the risk-based approach, the project team recommends applying that conditional requirement in all instances where the inventory's existence or condition are identified as relevant assertion in accordance with ISA 315 revised in 2019. The project team also recommends enhancing linkage to foundational ISAs by introducing explicit cross-reference in application material in ISA 501. So to reinforce that ISA 501 is part of a broader risk assessment and response framework. So now we would like to hear from you regarding the project team recommendation with question 1A for your views on the recommended approach to replace materiality-based conditionality by a risk-based conditionality, and question 1B for your views on applying the conditionality in all instances where the inventory's existence and condition are identified as relevant assertion. So Tom, we'll get back to you to hear from board member. Thank you.
Okay, thank you. So we're on question 1 of agenda item 8. Amara?
Thanks, Tom. This is pretty much my what I gathered from my feedback with auditors in Brazil. So the feedback is that we are very supportive with the approach to replace the materiality-based conditionality in paragraphs. There's just a reading here. 4.8 of ISA 501 with the proposed risk-based conditionality. We believe this would achieve the consistency with IAS 315, 330, recognizing that the auditors' responses are commensurate to the assessed level of risk of material misstatement identified. There are some suggested recommendation for the team to consider strengthening the related application material, recommending that the project expanding guidance and application material in relation to the execution of risk assessment procedures, considering both existence and condition elements of inventory to achieve a reasoning risk assessment, taking into consideration particular practical challenges such as inventories held at multiple locations, different inventory count programs established by the entities, for example, cycle counts or complete counts, and also the relationship of understanding these policies and procedures in order to help auditors make an informed risk assessment and to achieve what's most important, consistency in application in practice. We also suggest to consider further guidance on procedures to performing during the roll forward period, depending on whether the entity has inventory in multiple locations and when inventory at each location was counted by management. Also to suggesting expanded application material to promote, again, consistency in the application in terms of extent of further audit procedures in relation to the roll forward period, including, for instance, the definition of roll forward period when inventory is counted at different dates at each location or subject to a cycle count program. Those are the comments for 1A. So I would then later propose, make some comments on 1B. Thank you.
Yeah, I think we can take them all together. Yeah.
1B? Okay, thank you. Again, supportive with the recommended approach to introduce conditionality of the requirements in paragraph 4 and 8 of ISA 501, as described in paragraph 16 and 17 of the issues paper. The approach aligns with IS 315, while still recognizing the extent of procedures required in paragraph 4 and 8 of ISA 501 may vary based on the assessed level of risk material material misstatement. We also recommend taking into consideration the possibility of expanding application material to provide examples on the potential impacts to the extent of procedures required by paragraphs 4 and 8 of ISA 501, depending on the assessed level of risk of material misstatement, besides increased sample size when performing inventory test counts. Thank you.
Thank you, Amaro. Akiko?
Thank you, Tom. Thank you so much, the team, to summarizing the issue. And for 1A, I support the risk-based approach. First of all, yes, and I also agree that, and I will go to number 1B, and I also agree that auditors should obtain a sufficient appropriate audit evidence regarding the existence and condition of inventory, as set out in 501. However, what I understand is from your explanation is it might be something we will discuss later on, but the means of obtaining the evidence should be more modernized to reflect technological advancement, as emphasized in the project proposal. So in particular, we should reconsider whether attendance at physical inventory counting is the most effective way to obtain audit evidence in all cases, especially when entities are using more sophisticated tools, and explore what the better procedure will be. So that will be maybe what we need to consider going forward. And also we also need to consider the issue of over-reliance on third-party external confirmations to think about whether maybe paragraph 8 of the current 501 is appropriate. That might be a subject to our discussion going forward. So instead of applying the requirement of paragraph 4 and 8 in 501 as they are, I recommend incorporating the issue of modernizing the method used to obtain sufficient appropriate evidence in line with the project proposal. Yes, this is what you're thinking, I believe, but I like to emphasize here. Thank you.
Okay, one thing to say is, remember, we're just deal with some targeted issues today. So some of we'll certainly take all those points into account, but much of that will come back to the board at the next board meeting. Nancy?
Thank you, Tom. Yeah, so on our side, we're very supportive as well, both 1A and B. The only thought suggestion might be that trying to make that relationship with the valuation assertion explicit, maybe in the application material, so people understand conditions tied to that. Thank you.
Thank you. Christelle?
Thank you. I'm also supportive for 1A, supportive of replacing the materiality-based conditionality with a risk-based conditionality. This is more consistent with the risk-based audit approach and aligned with comments I have shared at previous meetings, so thank you. For 1B, I also support the proposed approach for the existence assertion linkage, as shared by Nancy. However, for condition, it should be made clear that not all valuation-related risks are captured by this requirement. For example, risk related to market value or purchase price. So the drafting should avoid implying that all valuation risks are addressed through procedures over the condition of inventory. And in addition, as already shared by Mikiko, the issue related to technology and particularly remote inventory count attendance will need to be addressed as part of this project in a later board. Thank you.
Thank you. Jaya?
Thank you, Tom. I'm also supportive of A and B. Just a couple of thoughts. One is how do we align with 315 and 330? So far, what we have been discussing is risk-based conditionality for requiring auditors to perform certain audit procedures. But if you step back a bit, go back to 330, you actually first come up with a question of what is your overall approach? Are you going to rely on controls? And after performing tests of controls, and then you will decide what would be the substantive procedure you perform. And whether it's observation or external confirmation, that's types of test of detail which you will consider after performing test of controls. So my question would be, where do you place the consideration of controls in 510 in terms of the existence and the condition of inventory? How do we make the whole standard flow? Actually, because currently I believe the control piece is not specifically discussed in 501, but it can't be missing from the whole story. If we look at 540 accounting estimate, we actually mirrored 315 and 330, starting from understanding, identify, assess controls, and then risk response. So make the story complete. We do not necessarily do the same for inventory because we only addressing existence and the condition, but there is a remit in there to make the whole thinking process flow. That's one suggestion. And the second one is, even if there is a risk of material misstatement for existence of inventory, it doesn't necessarily mean we will make it required for the auditors to observe the physical inventory. Because as I said, in some cases, it's impossible. I remember a case, it's about the fish aquaculture. You just can't do it because even if the physical inventory is, there is a ROM here. So I think that
that possibility need to be considered together with the consideration of risk. You don't make it required as long as there is a room. You should consider those other possibilities where observation, whether it's on-site or remote, neither is workable. Thank you.
Okay. Renan?
Thank you, Tom, and thank you to the team. I agree with the Amaro's comment. That's similar to I could hear from other stakeholders in Latin America. However, I'd like to add an additional point related to the definition of inventory into the standard, because in many companies with livestock and large tracts of land in Latin America, it is very challenging to evaluate the existence of the different animals, but this is not necessarily perceived as an inventory under the accounting framework. And we need to talk about inventory and other items with characteristic of inventory maybe into the standard, to be sure that we are also applying this standard to these situations. Thank you.
Any other comments? Ada?
Just to go on record that I agree with the suggestions put forward by the project team.
You don't have to do the same thing, but you're welcome to do it. Yes.
I think it's implicit that I agree.
We're happy that you're agreeing. Great. Good feedback there. General support of the direction with some suggestions. Bill?
Rather than us all saying we agree, it seems to me that once we've made the decision on Power 18 of 330, we all are on this same view now going forward, and other items you're going to come up with in this same paper, the targeted issues. I mean, we've adopted the risk-based approach, and that's the only way we can go.
Thank you, Natalie. Maybe prior to moving on to the next topic, I just want to respond to some of the comments that were provided by order of when the last one came in, on the suggestion to consider a definition of inventory. And as you, Hernan, appropriately alluded to, it's an accounting principle. So most likely would be outside of the remit of the IAASB. So thinking of firsthand, I don't think that's likely where we would land. And then I appreciate all the comments that you provided on pieces that would come to the board in June. So I would counsel the board to that we appreciate their comments nonetheless. So on to the next topic for inventory under the custody of control of third party. So for this matter, the key issue really on this one is the tendency for auditors to actually default to solely relying on the procedure in paragraph 8A of ISA 501. And this may stem from the current wording of the standard as it stands today, which allows the auditor to do either one or both. So stakeholders had noted that sole reliance in this case may not be appropriate, particularly when there are concerns about the reliability of the confirmation itself or the integrity and objectivity of the conforming party. Other views also indicated that doing so may not be appropriate when such inventories have associated significant risks. Feedback also included that, it might be appropriate for the auditor to, in lieu of 8A, do B, or in addition to 8A, do B as well. And that should be driven by the auditor's risk assessment, but also that it should not be mandated in all circumstances. And then finally, stakeholders underscore the importance of the relevant controls over inventory, both at the entity and at the third party. On the next slide on the project team's views. So in this case, our views really on this one were anchored in two key elements. First, on the proposals on topic B in the issues paper, which is to align the requirements in ISA 501 to the risk-based approach in this ISAs. Second, on the principle in proposed ISA 330 revised of the auditors need to obtain more persuasive evidence as your inherent risk increases along the spectrum. So against this backdrop, the project team considered that sole reliance on external confirmation procedures is less likely to provide sufficient appropriate audit evidence as your inherent risk increases. So accordingly, the project team recommends clarifying in 501 that sole reliance may not be appropriate or is appropriate when your inherent risk is at the lower end of the spectrum, and contrary to that, due inspection or other procedures necessary in the circumstances when your inherent risk is not at the lower end of the spectrum. That basically summarizes the position of the project team. Tom, I hand it over to you to hear from the board.
Amaro?
Thanks, Tom. This paper we really discussed at length with Brazil. So we are basically supportive of staff recommendations in all three ABC, but with some recommendations. In A, we suggest that the application material discusses also the relationship of sufficient appropriate audit evidence regarding the existence and condition of inventory held by a third party versus performing external confirmations in such scenarios, discussing also the potential limitations in both appropriateness and sufficiency of such audit evidence depending on the assessed level of risk of material misstatement. And the reason is because external confirmations are often seen as persuasive audit evidence that may respond to higher assessed risk of material misstatements. Therefore, providing clarification about why this might not be the case in relation to inventory under the custody and control of a third party might be beneficial for auditors to understand the relationship between the change proposed with the concepts within ISA 315, ISA 330, and with ISA 500. Regarding B, again repeating, we are very supportive of the proposal of the project team consider the underlying principle in the ISA 330, but we also suggest the application material also deals with auditors' consideration over the understandability over the understanding of the third-party processes and controls where relevant in performing risk assessments over existence and condition of inventory under the custody and control of a third party, and also emphasizes on considerations over objectivity, competence and capabilities of such third party in providing reliable information, and this even in situations where the risk is assessed as low and where sole reliance on third-party external confirmation is planned. For C, we also agree. However, the use of the word, I think I've get into this previously, and I was convinced otherwise, but the use of the word may, we understand that can eventually undermine the intent of the requirement being proposed by the project team in B above, and in B, question B, item 30 in the issues paper. We suggest considering modifying the word to include should. We also suggest that the application material consider providing guidance and emphasis on consideration of controls under the circumstances described in paragraph 8 of ISA 300, both in terms of existence and condition of inventory under the custody and control of third parties. Thank you.
Thank you. Amara? Neil?
That was tricky. You looked at me and called someone else's name. I thought, you try to get me. So supportive of exploring alternative ways. I do think that, unlike bank confirmations, as an example, warehouse confirmation comes with other risks around valuation damage, theft, etc. So there are more variables, and therefore exploring alternative ways of getting evidence in some circumstances is absolutely appropriate. There are sets of circumstances where I think it's very difficult for the auditor to actually physically attend. So exploring what those alternative procedures would be useful. I think there's a service organization, service auditors type of reporting around controls, which would be helpful. And so I'd encourage exploring that. And I think the SOC type reporting, the service auditor reporting, would also then help when we go into more advanced scenarios of like fully automated type warehouses. And so there's an alternative around if it's fully automated, is there a SOC report that then backs it up and supports it? What are those circumstances? When can we explore it? And I think that would be a useful thing to take on board.
Thank you, Neil. Krista?
I'm also supportive of the choices that you made for 2A, B, and C. I have one comment on 2B. I think that on clarifying when sole reliance on third-party confirmation may be appropriate, I would be in favor of another option, which relies more on criteria to consider, such as the risk of material misstatement identified, the total value of inventory held at third parties, how the third party record and maintain the information related to inventory, doubts about the competence or objectivity of a third party, or the extent of the entity's involvement or influence over the third party. I would also limit the sole reliance on third-party confirmations for significant risk. Thank you.
Thank you. Robert?
In my outreach last week, there was an intensive discussion about these topics. With respect to A, I would like to share some content. The linkage to inherent risk is understandable and may be helpful as application guidance. However, the view is that it should be coupled with a link to the potential persuasiveness of evidence. And third-party confirmation with a high level of quality in this context could also be sufficient and appropriate to cover the relatively higher level of risk. With respect to B, the question was, how is this aligned or in competition with ISA 330? And I think this topic was also raised throughout the recent discussion here by some of my colleagues. The view of the discussion was the determination as to whether sole reliance on third-party confirmation should not or is not just a function of risk, but also of persuasiveness or quality of the third-party confirmation itself. The higher the quality, the higher the risks that can be addressed by the confirmation. So there should be guidance included related to risk. So if guidance is included related to risk, it should be accompanied by guidance on the level of persuasiveness. The question of whether evidence is sufficient to reduce the risk to an acceptable level does not solely depend on the risk assessment on its own or alone. So I would slightly disagree with insisting that the risk must be at the lower end of the spectrum of inherent risk. Rather, the view was during the discussion we had that the guidance should be at the higher level of inherent risk the higher the quantity and quality of audit evidence should be. Third-party confirmations can deliver sufficient and appropriate evidence if the quality of that evidence can be considered appropriate. Thank you.
Okay, thank you. Shaya?
Thank you, Tom. I think for the inventory under the custody by third party, we first of all, I mean, in general, I support the direction of the project team, but in terms of how we put forward those enhancement to the standard, we need to have a few things in mind. One is whether the direct linkage between the level of ROM and the use confirmation as the sole or the evidence is the necessary linkage, because in some cases, even if the risk level is at a lower end, the external confirmation might not be the right way to obtain all the evidence. And secondly, it goes back to my early comment, is how or where do we put that piece about the understanding of the process and the controls in the whole story before we say, you shall do external confirmation. And also there is this question of linkage with 505, because when we're talking about confirmation, there are a lot of things to think about, including the third parties' nature and objectivity and their competence, blah, blah, and the reliability of their reply. So all that will bring uncertainty to the level of assurance we can derive from the third-party confirmation. So it's not like, oh, you send the external confirmation and you've done. And we will also need to consider the possibility of no reply, which is common, because in my outreach, our practitioners in China raised this concern, is that they have many customers doing e-commerce business. They put their inventory under the custody of, say, Amazon or Alibaba, but those parties, they just don't reply confirmation requests. Then what do you do? So then it might goes back to Neil's suggestion about you look at the SOC report, you understand the controls, you do other alternative procedures. So all these pieces should be considered. So my suggestion is, when we touch on this inventory under the third party custody, maybe we don't solely focus on the external confirmation piece. We consider the integrated approach to address the risk in the most effective way. Thank you.
Thank you. Nancy?
Thank you, Tom. So agree with a lot of elements that's been brought up already, primarily supportive at the general direction. I think it's good. The part that I have a bit of question mark with, and the way Robert articulated it, I think it's a similar point. So it's not just about the inherent risk as to whether it's the lower level or whether it should be at high level. The linkage I'm trying to make is the assessed risk of material misstatement. So getting through it, like looking at the inherent risk assessment is just my starting point. I need to then bring in the control element. And really, I'm looking at residual risk and what is the linkage between the residual risk of material misstatement at that assertion level vis-a-vis the evidence that I would bring through the external confirmation. So it's placing it in the right way. And that kind of permeate through the question A, B, and C. It's really tying it to risk of material misstatement and how that piece of external confirmation would play. In the outreach, there were some elements that were brought up similar to shall use, which talks about credibility, like it's more than, like we only articulate a couple of points relating to the third party, but also there are other elements that we need to consider as well. But that's for the next round. Thank you.
Thank you. Okay. Wendy?
Thank you, Tom. And I agree with the direction of the project team. You know, the actions align with the project proposal that we're going to vote on in a little bit. The caution I have a little bit is on the interconnectivity. I'm a strong supporter of 315. That's where my strongest support goes to what we're doing here. But then we're gonna, you know, we're making changes to 330, we're making changes to 505. So let's just make sure we don't create conflicts, and that we focus on getting sufficient appropriate evidence for material misstatements or relevant assertions for existence and valuation in what we revise here. I'm particularly focused on making sure we understand what management's controls are over their inventory at external warehouses. I think historically that's where the not obtaining appropriate evidence because it's hard to get has been a challenge, which then links into perhaps getting a SOC report, but what does management do with that? Those are my comments. Thanks.
You know?
Thank you. In reading the project team's views and recommendations, it started off well. And I think so in connection with question A, yes, I agree. And the underlying principle is the higher the risk, the more persuasive the audit evidence need to be. So then we go to B and said, what is changing there? We get rid, I entirely disagree with B. We do not need to clarify circumstances where a confirmation on its own can be sufficient or not in the requirements. Well, it could be application material, but that is not the principle. That is creating a 330.18 in its own, and we don't need those. If we apply the principle, here is risk, what do we need to do to address that risk, and do I have persuasive evidence? Goes to what Robert says, and I've heard it around the table of others as well, and then you have a flexible and a judgment-based ability for the auditor to address specifically what needs to be addressed rather than, oh, but there's a requirement that I need to do this on top of this, even though it may not add any value. So that's my struggles with both B and C, where I'm not there. I disagree with those. Thank you.
Ado, just want to understand your concern and what directionally would your preferred your envisioned outcome to respond to the issue. So is your concern that we are possibly adding a requirement to clarify these circumstances? You're opposed to that? Is that your concern? Okay.
Yeah. So to have a requirement to clarify when the response or the confirmation would be sufficient is unnecessary based on the principle that we already have. So to clarify circumstances in application material where such evidence may be persuasive is a more appropriate way of approaching it. Thank you.
So would, just a follow-up, so on C though, would it be acceptable to you, palatable to you if it were a requirement, or it's consistent with your views in B, it should also still be an application material? Because this is where we've explained in our papers where, you know, possibly addressing it within application material may not be strong enough to respond to calls to strengthen this aspect. So I completely understand your views on B, but on C though.
Look, I want to see it.
Okay.
Then.
We don't have to solve everything today. Thank you.
Sammy?
Yes, thank you, Tom. I would like to say that I'm generally supportive of the team approach And listening to so many different views that had just been mentioned, I'd just like to say that there is no right or wrong answer in these situations, but also would like to address the fact that one of the reasons why we are addressing those standards is that we got maybe some complaints or number of failures or fraud cases took place around the use of confirmation. So coming up with a new standard at which instead of strengthening the rules around confirmation and instead of that lessening the number of rules in there or lessening the number of procedures or standards or requirements, we need to consider how this will be reacted to by the public eventually. So I'm not saying there is one right or wrong approach, but it's important to balance all these views at the end of the day before we come up with a final conclusion. Thank you.
Thank you, Sammy. Hang
I think if we could move, thank you all for your comments, by the way. I'll refrain from responding to each one of them. So move on to the next topic, which is on negative confirmations. So on this one, the concern really is about their relevance and reliability, really more about their reliability as audit evidence. And this arises from their inherent nature. That is, a confirming party rather, is only expected to respond if they disagree with the information provided in the request. And as a result, when no response is received, auditors actually infer that the conforming party agrees with it. So this can lead to undue reliance on non-responses, effectively meaning that there is no direct audit evidence in those cases. So stakeholder feedback then highlighted that some jurisdictions have taken a more restrictive approach than ISO 505. For example, some jurisdictions explicitly prohibit their use altogether. Some also permit their use only in combination with other substantive procedures. However, when we actually did our very extensive outreach on this topic, we had mixed views on its appropriateness. Some stakeholders, questioned their continued relevance and suggested removing it in ISO 5 altogether. Users, however, of financial statements indicated that their confidence in the audit could be undermined if negative confirmations were used as the sole substantive audit procedure. At the same time, others cautioned the team from prohibiting them entirely, noting that they may still be appropriate in certain limited circumstances. So if you go through our recommendations in the next slide, consistent with some direction provided by the board as we were developing our project proposal based on our discussions last Tuesday. So much of our views and recommendations were informed by jurisdictional developments on the use of negative confirmation requests, as well as the extensive feedback that we've had with a broad range of stakeholder groups. And on balance, the project team does not believe that it would be appropriate to explicitly prohibit its use on the basis that if you prohibit it, it would remove a potential source of audit evidence, effectively taking away a tool that's currently available to auditors today. While they are also less persuasive generally, they can, in combination, as I've said earlier, provide sufficient appropriate audit evidence when performed in combination with other substantive procedures. And this, the project team's position is also reflects some concerns raised by certain stakeholder groups that, cautioning us about the potential impact of a prohibition on their local regulatory frameworks that incorporate the use of negative confirmations. And I want to go back and discuss further. You could read, you probably have read through our other recommendations on the matter. So maybe, Tom, I could open it up for a discussion.
Okay, thank you, Hagen. Mar?
Just kicking off here. help the discussion. So and according to the outreach, we understand the reasons why the staff is proposing. And I think that the main question during the discussions I had is whether or not negative confirmation are actually capable of providing any level of audit confidence evidence. But apart from that, considering that preconditions of ISA 505 are met, we ended up with two concerns that we believe could be taken into consideration by the team. I'm responding to one A. First is, can we still support that the negative confirmation was actually performed and provided even less persuasive audit confidence without having ability to confirm that the intended recipient has indeed received and read the negative confirmation request? So that's a big question mark. We'll never know. The second, that I found this particularly interesting during the discussions about phishing techniques. So even if you use electronic form of confirmation, it might be the case that its effectiveness can be disregarded because of the growing number of phishing techniques and fraud, and people will simply disregard the request. So there's 2 points that we would like to put for the staff to think about. Can I comment on B as well? Do you like? Okay. Regarding B, we agree the proposal, the general thinking. However, during the discussion, we get to the position that this would not be achieved without understanding whether or not negative confirmations are capable of providing any level of audit evidence. So back to the first comment. As for the comment, if the proposed way forward is considered, we believe that the application material also needs deeper refinements to bring auditors' consideration on the relevance and effectiveness of the procedure. How may an auditor, for instance, prove that the procedure was performed and that evidence was obtained, and consider the question commented before. Current A23 application material in ISA 505 is complex for auditors to consider in practice. This was the feedback. Thank you.
Thank you very much. James?
Yeah, just to put on record, so my jurisdiction is one of those that prohibited negative confirmations. We got almost no pushback at all about that from during the consultation. I think it's an inherently flawed tool for an auditor. I don't think it provides sufficient evidence. That being said, I'm supportive of the proposal to go out because I think the question needs to be asked. But I'd be really interested in having a persuasive use case where it could be used properly, because I don't think I've heard one yet.
Wendy?
Thank you, Tom. I support the direction of the project team right now. James just validated my point that I think we need to be highly principles-based, not prohibited, and let the jurisdictions determine, because I think in certain jurisdictions it might be prohibited, and that is okay. We are also running through the same project in our jurisdiction, and we got a tremendous amount of pushback on potentially eliminating negative confirmation and also balancing it with not making the restrictions so onerous that you would never be able to use negative confirmations. So I think it needs to be jurisdictionally determined, and I like the direction that you intend to go.
Nancy?
Thank you, Tom. So very interesting. So in Canada, it's the other way around. We actually, regulatory-wise, for investment dealers, they have to send out negative confirmation. So I think to Wendy's point, we need to accommodate various jurisdictions because we're setting global baseline. So maybe a general thought and a more specific comment. So the general thought is I think we still go back to the conversation we had earlier. If we keep it principle-based, what we're looking for is to say, what is the value of this particular procedure in my whole bucket of evidence to respond to risk of material misstatement, assess risk of material misstatement at the assertion level. So I think that needs to always be our anchor and always go back to that. So not putting in prohibition or saying that you have to do it, it's risk-based, use your judgment, and then also follow the local rules, local laws and regulations, if we want to call it that. The value of negative confirmation, well, put mildly, it's quite limited. So we actually have heard from a couple of people sort of say, well, it's kind of like if I do nothing, hear nothing, then that's really worth something, right? So like on its own, it just doesn't seem to make much sense to sort of say that that's good evidence. You almost always have to do it alongside with other procedures. So I think making it clear that you needed to, not prohibiting the use, but you need to look at the overall response to the risk, and that this one, it's really very light. So in rare occasion, would it be offering really some value, like to the bucket of evidence, the body of evidence, contributing towards that persuasiveness. So the more specific suggestion is that having that list and talking about, it's rare that you would actually use it, and then the preconditions, if you would consider adding a point about or required by law or regulations. Thank you.
Ada?
Thank you, Tom. So as many around the table, I have questions about the persuasiveness that negative confirmations can bring in the bucket of audit evidence. Having said that, I don't think it's necessary to remove the ability in the standards and on the basis of a recognition that negative confirmations are of little persuasive value. In this case, I would be supportive of a precondition, but I'd like it to be anchored on that limited persuasiveness of negative confirmation. And as a result, you always need to do more. Thank you.
Neil?
Don't want to repeat everyone. It's weak evidence. I wouldn't prohibit it. And like James, like maybe someone out there has got some social media type channel that would be an interesting way of us understanding how this could be used differently, etc. I don't have examples either, but maybe there is an avenue. Let's explore it. But I wouldn't ban them.
Bill?
I just want to agree with what Edo said earlier and Nancy followed up then, is that it all is based on the risk of material misstatement. If we're really adopting the risk-based approach, prohibitions and mandating things, it goes against that whole thinking. The answer will be when you do your assessment of the risk of material misstatement and compare your bucket of audit approach to follow that.
Really?
Maybe just a quick response to give a different perspective to what Bill said, and I don't disagree, and this has been an excellent discussion so far. And I fully agree, we want to support our risk-based approach as far as possible. But we do have instances in the ISAs where for purposes of clarity or consistency or compliance, we do sometimes mandate something and say, you know what, sorry, this is non-negotiable. And I'm not saying these are the cases, but just keep that in mind, that we have instances where we do that.
Okay, go.
Thank you, Tom. Yes, I have a general comment. So I agree with the overall direction of the team's approach, and where negative confirmation cannot be used only solely. Yes, but what we should consider more is that the change in circumstances. So what I read somewhere is that actually the 10 years ago, maybe 2015, compared to the 2015, so 10 years ago, the information which is available for people is 300 times more. So in these circumstances, maybe before we were living in an era where the information is really more stable, and then maybe someone can receive the confirmation email, and then they didn't respond, but they confirmed. That possibility was higher than the current situation. So that is what we need to consider in the current circumstances. Thank you.
Robert?
Yeah, I just want to mirror with respect to prohibit negative confirmation, don't do it. Yeah, like some of my colleagues already requested to stay with them. I'm struggling a little bit with the notion that they should only be allowed when with other substantive procedures. The question we discussed in my youth outreach is whether it could be in some instances too restrictive. Just to give you a practical example, like in corporation or an OEM sending out negative confirmation to a large number of suppliers that have zero balance. And this may be effective to address the completeness assertion, since typically these suppliers will have an incentive to respond if they believe the reporting entity owes them money or whatsoever. And just think about millions of bank statements sent out to us, to the customers. Do I respond to the bank? No, only if I believe the balance is wrong. So just think also, please, about this practical manner or impact. Thank you.
Thank you. Okay, so my read of this is general support for the continued direction. Lots of skepticism about the persuasiveness, about negative confirmations, but a desire not to immediately jump into prohibiting it, and use the exposure process as a way to maybe get some more insights on the value.
I think we covered, you summarized it so well, Tom. I think you could turn it over to Jesper for the next topic.
Hey, thank you, Henk. And this is the last topic we'll be discussing today. So this issue really arises from some high-profile frauds that's been happening over the last decades. Therefore, there were more calls for well-executed confirmation procedures on certain account balances, and then specifically related to cash and cash equivalents, and also accounts receivable. The action, like this is still the old wording that there is. She could have seen in the project proposal, we slightly changed it. So it will now be determine appropriate revisions to requirements or application material regarding the auditor's considerations about the need to perform external confirmation procedures. So that has been updated based on Tuesday's discussion. So what did we hear about this topic in our outreach? So there are some inconsistencies in the approach taken. Some jurisdictions require confirmation for certain account balances. It is a minority though, like the majority of the jurisdictions that we spoke to, they do not require, they don't have a requirement that way. Also, we've heard that some firms, even though there might not need a jurisdiction or it doesn't require it, to still require the need to perform external confirmation procedures for certain account balances, or sometimes there's a high expectation to do so. So the circumstances would also, when it would be required, would differ between jurisdictions. What we also heard were a lot of concerns about mandating external confirmation procedures in all circumstances. The two reasons that were mostly cited were really the practical concerns. It's not in some jurisdictions, it's harder to obtain. Also in cross-border situations, it could be harder to obtain confirmations. Another topic that came through regularly in about these concerns is that other audit procedures may provide similar or even better audit evidence. And by mandating this, it would be seen as the holy grail of audit evidence, while it might not be the case. Interesting enough, users in our outreach with users of financial statement preparers and those charged with governance, they were actually in favor of mandating this for certain account balances. And then on the other hand, what I mentioned earlier as well, the S&P&G, they questioned even the need for any changes in this area. So what are we proposing? We looked at two things as a more general approach, and then some key considerations. And these key considerations, they apply. A lot of them apply to each of the approaches that we considered. On the approaches, we looked at three possible ways forward. The first one is to require external confirmation procedures for certain account balances. The second option was to explicitly require consideration of whether external confirmation procedures are to be performed for certain account balances. That's also our preferred option, as therefore it's on the slide. And the third one is to retain the extant approach, but add guidance for situations when external confirmation procedures may be needed. So those were the three we considered. The first one, so requiring external confirmation procedures for certain account balances, we quite quickly disregarded that one, given that the outreach that we did and what we've heard from our stakeholders. So we don't think that it will be workable on a global level. So the project team in the end felt that the second option, what's on the slides, will create more consistency around the globe that there is right now. Also, on balance, we think this approach is proportionate and tailored, and it's a good response to this the heightened expectations around confirmations. So the second part is on these key considerations affecting how the approach could be applied. So these, as mentioned, they really apply to all of these the three options approaches that we looked at. So even though if you disagree with our option of the approach laid forward, we're still interested in your thoughts on these key considerations. So the specific account balances where it could apply to, like in our outreach, is really people are talking about, our stakeholders are talking about cash and cash equivalents, accounts receivable as well, and after that it's really there's no we didn't hear a lot. So we really would be dealing with these two account balances. So the level of assessed risk, so we thought it would probably be when you're at the higher end of the spectrum of inherent risk, or when it would be a significant risk, that you would, this requirement would then apply. We didn't think there should be any exceptions to this requirement. I think it's already risk-based how we've set it up, how it's set up. So therefore, there's no need for that, and would also further otherwise dilute the strength of the proposed way forward. And then we think it should be applied to all audits of entities, because I think we don't think it's not the risk. It's really about the risk and not the size of the entity. So I think this risk is the same in an SME as it would be at a listed entity. So with that, interested in your thoughts on our proposals. So both, as I mentioned, about the approach and also about the key considerations. Thank you.
Nancy?
Thank you, Tom. So on balance, we rule out option A very quickly too. On balance, I think we favor option C. In principle, there isn't a lot of big difference between B and C anyway. The extant approach under 330.19, it's already there. You need to consider, right? So I like the idea about adding guidance to help support basically, implementing and using 33019 and its application material. The anchor still comes back to, I like the fact that you mentioned significant risk. I never really just look at the inherent risk. You have to look at that, but that's part of my journey. So I really look at significant risk. The other point I would highlight is that as far as account balances is concerned, we're on the same page. It's primarily really cash equivalent, and receivables. Thank you.
Christelle?
I'm supportive of option B, which seems balanced and more practical to implement than option A, probably limited on bank. It will be important that the drafting clearly accommodates the use of direct access procedures, for example, auditor access to bank portals or other third-party systems, as an alternative way of obtaining evidence from external sources, not only traditional confirmations. Concerning 4C, I support a mandatory consideration of external confirmation or direct access procedures for cash and receivables. And I believe this should apply to all entities, not only in higher risk situations. For some B2C environments, obtaining receivables confirmation can be extremely challenging in practice. And I'm not in favor of restricting the consideration only to higher or significant risk. Rather, it should apply to significant callback. Thank you. Cut out. Sorry.
Wendy?
Thank you, Tom. So I agree with the direction, and I also agree with the comments that Christelle just made. I want to make sure I emphasize again that direct access is not confirmation, it's an alternative to, and I want to make sure that we separate that out and focus on it. Again, here, I believe this needs to be risk-based, but I liked what Billy said earlier, that sometimes we have exceptions, like fraud risk is always a significant risk in different standards. So, I'm comfortable to have those exceptions, but I think we need to keep this principles-based and again, let jurisdictions make decisions on where confirmations might not be effective because of, or in certain industries. Right now there is a perceived difference globally. In the US, we do have requirements for confirmations in certain circumstances. So again, keeping it principles-based would still allow global engagements to work across jurisdictions.
Mara?
Thanks, Tom. My comment's very similar to Wendy's. I very much agree with that and the comments before. So just put forward to the staff one example. So first, our suggestion is to take into consideration application material that deals more clearly with no responses, so that it's clear that alternative procedures would provide the same level of audit evidence expected from external confirmation procedures. This is one thing. The second is drawn from the Brazilian environment, actually. So in Brazil, financial institutions generally are not responsive for confirmation sent by mail or email. What they are doing now, most of them, I think the majority, they use other means to access the information requested by the auditor to obtain the confirmation needed. So, and this may involve direct access from a knowledgeable external source that is generally accepted. So direct access can also be a mechanism to obtain persuasive audit evidence as an external confirmation in this case. So we suggest you to also consider expanding the application material to deal with considerations on the use of technology. It's very much aligned with what our other work, to request or receive external confirmations.
Shaya?
Thank you. Out of the three options, my personal proposal is A plus B. A for cash and B for accounts receivable. The reason for that is I fully concur the observations from the regulators and other stakeholders in terms of the importance of cash confirmation in terms of, the effectiveness and the objectivity of the confirming party and its importance in which supported by many of the fraud cases. And in my territory, our auditing standard long ago has made it required, but it's not a straight mandate. It's a mandate or it's a requirement with possible rebuttable situations when cash and the cash equivalent is not material to the financial statements and the ROM is very low. In those cases, you are waived. But in principle, we still believe that external confirmation is the most effective way to obtain persuasive or the evidence on existence of cash and the cash equivalent. Thank you.
Ada?
Thank you, Tom. In respect to the proposed approaches, the outreach seem to have a slight preference for C. I'm more in the B camp, but wanted to make you aware of it. In respect of question C, where you talk about the risk approach, or where it would be skewed towards when it's at the higher end of the spectrum, my thoughts in reading this would be probably the other way around. So it's not low. So I think you would start sooner. I don't think we use that concept of not low, but but that would be my my view. Thank you.
Robert?
Again, mirroring from my outreach, and I repeat myself, how is this aligned? Your approach, how is it aligned with ISA 330? And then with respect to external confirmation per se, unfortunately, in my jurisdiction, we had a high-profile case of supposed audit failure where external confirmations have been sought. Yeah? And so the issue here is rather about the reliability of the information obtained. And this should be considered as well. So to put it in another way, if we were going to change ISA 505, does this really prevent the cases of audit failure we have seen? Question mark, just to place it here in the middle of our board table. So any changes would certainly need to be flexible enough to enable auditors to identify alternative approaches. And thus, we would be against option A in any case. With respect to your second question, or B question, we believe necessary guidance is already included in ISA 330. Again, how is the alignment with ISA 330/501? And for C, risk-based criteria for the approach would be of preference for the application. Thank you.
Yeah.
Thanks, Tom. I'm going to say lots of what everyone else said, but the key for me is that I'm hearing different views around jurisdictions on the negative confirmations. So one country mandates it, the other one says you can't do it. So I don't think that you could have a mandated piece because of the jurisdictional differences that you'd experience. And I think the way people respond varies. So I would very firmly be in the camp of B, giving it consideration, etc.
Yes, thank you, Tom. Having answered the question, triggers a further thought into where this need to sit. Because 330, as your paper articulates, that sets the requirement to consider whether external confirmations needs to be sent. So a lot of these requirements feel to, or the thought process that you're going through, feel much more a 330 consideration than a 505 procedure. That because you first make the decision, I'm going to confirm, and 505 tells you how to. So that's something that the team needs to be aware of, and that the alignment still gels. Thank you.
Yeah, I think that's a fair point. We have discussed this with the team as well in different ways as well, like on the way forward, wherever it lands in future board discussions. So we do think it wherever we land, it would work. But it is something we need to consider. I think other jurisdictions have placed it in their external confirmation standards. But to your point, I could see it also land somewhere else. So thank you for that.
The only issue is if we wanted to do it in 330, obviously the timing is key. Like we have the intent is to get 330 out for an ED in June. So I think we'd have to. This may be a just topic we have to pick a path pretty quickly on if that were gonna happen, right?
Yeah, it doesn't necessarily have to be in the ED, because remember, this proposal will also be exposed as part of the 500 project. The two projects do run parallel, so I think in the end, there is a possibility for them to come together.
Yeah, but I think we need to think about the coherence of our proposals too, like where else, because then people are going to be cross-referencing, and we want to sync things up and problem. So it may be useful thinking about this and getting some at least path forward. Maybe this would even be an issue that we would bring back to the board in May or June, right? Okay. Back to you.
So the last thing that we have is. Oh, sorry, Sammy.
Yes,
Sammy?
thank you. Just one final comment. Considering the number of fraud cases that took place around confirmation, again, I would say, in addition to considering the question of whether to send the confirmation or not, or whether to rely on external confirmation procedure or not, also what kind of other procedures that can take place around the confirmation, maybe in the application material. This can be very helpful. It might be another area that we can look at as long as we are developing 505. Thank you.
Thank you, Sam. Jasper.
Yes, let's first of all thank you all for your comments. It was really good discussion and good input. On the way forward, this shows it for everything up to the targeted approval of the exposure draft in December. So in June we'll get back to you with discussion of additional issues, also some preliminary drafting in some areas. Then in September we'll go to a first full read of the standard, and then with December of this year hopefully the approval of the exposure draft. And then just with the discussion we just had on where things sit in ISO 505 or 330, we'll pick that up as a matter of urgency and address that. So with that was everything from our side, Tom. Thank you.
Okay, great. Any other comments for the team? Dave, any reflections?
Really nothing to add. A great conversation, and we'll look forward to seeing the future developments.
You just said nothing to add. Look forward to future developments. One of the things is I've learned with this project, we've gotten a lot of observations and comments on this project, not related to any of the topics we've raised yet, which is great. We're going to do it. But some of the comments that I've gotten back from feedback from stakeholders is like, you guys aren't doing X, Y, and Z. Well, we actually are doing X, Y, and Z. It's just, we haven't gotten to those topics at the board meeting. So certainly, we plan on addressing all the issues that stakeholders have raised, and the public interest issues related to these, the 500 series. So I just wanted to get that on the record. So what I suggest now to do is, excuse me, okay, move to the project proposal and the approval. And then we'll take a mini break after that.
So Tom, do you want me to quickly introduce it, what we on a high level, what we've done? Yeah. So on Tuesday, we presented you with three high-level themes that came through in the comments that we received on the project proposal. So I just thought it would make sense to quickly guide you through these three themes and how we've addressed it, and then hear whether you're okay to vote on the project proposal. So the first is a key theme that we've heard was the removal of key issues and proposed actions that relate to matters perceived to be solely performance issues. So we added to paragraph 18 of the project proposal, we added there a sentence that the insights obtained throughout the project may indicate that certain key issues may be solely performance issues, and that they do not warrant standard setting action. So this is in the case where we identify something that's just solely a performance issue, that it's that we may not do any standard setting there. The second area of that we've heard where there were comments, there was the changing of the verbs, describing certain proposed actions. So in instances where concerns were raised, we looked at that and we made certain changes. It's really sometimes we changed the action from enhanced to determine appropriate actions. That we changed that in a few places in the actions. Then the last area was the change to conjunctions used in describing certain proposed actions. Again, here we went through all instances where it was raised, but also more generally throughout the proposal, and to see whether the and needed to be changed to or the other way around. And there we made appropriate changes, at least what we thinking were appropriate changes throughout the project proposal as well. So at least those were the three things we did to address these high-level the high-level themes we received from you. So yeah, Tom, with that, I maybe hand it over to you to ask for the board if they have any additional comments on the updated project proposal.
Okay. Any comments on the project proposal and the proposed changes? Are people satisfied with Wendy?
Thank you, Tom. Just one consideration in light of the conversation we just had about negative confirmations. If we go to B5, should we consider dropping, including whether the standard should prohibit their use, and just leave what it said, determine whether the requirements and application material allowing the use of negative confirmation requests in certain circumstances remain appropriate in the current business and audit environment, period, instead of having the inclusion.
So in fact, we just did the action, and I think we had to say, we had the conversation. We remember, technically, you usually approve the project proposal before we do it. Like, I wouldn't want to preempt the fact that we did it. It's on the record now. I think that for the most part, that action's done.
I'm fine.
Okay. Before we vote on the project proposal, I wanted to ask if the PIOB has any reflections, whether there's anything that they'd like to add before we go to approval.
Tom, nothing to add.
Thank you, Dave. Okay. So does anyone object to vote in on the revised proposal that was posted for public consumption yesterday afternoon? Okay, does anyone want to either abstain or dissent on the project proposal? Can I get a vote for support of the project proposal? Okay, let the record show, all 16 board members voted for the project proposal. Well done to the team, and we're, as you know, we're off and running already. Billy, any further comment on next steps?
Yeah, so Tom, as always, the final text of the project proposal will be posted on the meetings webpage by early next week. And then we will also, as always, put the project proposal on the project page, on the project webpage. And then, well, you've already started with the work. We'll just continue.
Okay. So we're at 11:30 right now. We're a little behind time, but not much. What I suggest to do, oh, I'm sorry, I'm reading the wrong deck. There you go. We're right on time. Sorry. But I suggest that we do a smaller break. We started late, and TSA lines along, and I'm conscious that people need to get to the airport earlier. What I suggest is a 10-minute break, really, just enough time to get the teams changed to the table. If you have to use the facilities or you want a coffee or something to drink, replenish it. But let's reconvene in 10 minutes, and we're gonna switch to 2410. 11:45, we'll reconvene. Can we get back? Okay. Welcome back. We're gonna choose between, go to 2410 and hopefully move to approve our exposure draft. Thanks to the team for turning the documents around. They held some office hours today, so maybe we'll get an update on what they've done and any other suggestions since then. And then we'll move to a vote.
Okay, thank you, Tom, and thank you to everybody for one, the discussions this week, and those who came to see us this morning for further comments. There were just a few things that I wanted to call out in terms of the changes that were posted in the agenda papers last night in agenda items 2F1, 2G1, 2E1, and 2D1, I'll say in that order, that relate to matters that we've discussed. In relation to the requirements, I wanted to highlight, first of all, in the objective, we added the words whether due to fraud or error that had been requested by various board members had indicated that this was missing. We have, I'm not going to highlight all of them because obviously they are there, it's just the ones that we thought were of most significance to highlight. So then I'll skip over a couple. Then in paragraph 34, which was a requirement to do with the agreed terms of the engagement, a board member had raised a concern around 34F remaining as a requirement because it may not be applicable in several jurisdictions. So we have moved the related text to a paragraph in application material. So that was text that talked about obtaining agreement from management that any document containing the interim financial information, if it indicates that the interim financial information had been reviewed by the auditor, the review report would also be included. This was not in requirement in other equivalent standards. So we've now placed an application material to reflect that. So thank you for that. We made some changes to respond to 42, paragraph 42, that related to the inquiries of management. To pick up the note, I think Ado had made a comment and potentially a couple of other board members as well around the highlighting a bit more the focus on accounting estimates and significant accounting estimates. So we added text to address those. But the main one to highlight otherwise was just in relation to fraud. To clarify the language that inquiry alone may not be enough. So that was reflecting a concern around that. So we changed those words to obtain an understanding. And in the going concern section, in the reporting on going concern, we had suggested some changes that to paragraphs 100A to reflect the discussion yesterday. I'll pull this one up shortly because the final text now looks a tiny bit different to what was posted yesterday. We also adjusted in the items posted yesterday, the section on comparative information to consolidate it as one. So I think those were the main areas in the requirements. In application material, the main change, I think that at least we have had a question about this morning because of not explaining it directly. There is a paragraph that is deleted that appears then to potentially be omitted, but is not. So it's A62, which was a paragraph that had referred to the auditor, the auditor may decide to perform certain audit procedures associated with the annual audit in certain circumstances. And actually that sentence was already included in a paragraph in A70 that we have then also revised. So it was just deleted in A62 to avoid the duplication. Other changes just included that I purely as a full addition, we added the reference to technological resources up in A30B. Since then, we have this morning made a final slight change for clarity to requirement in 100A. So if you were to, I have now minimized this extension. So 100A as posted yesterday. And I think actually I've put the revised text on.
Could we get it on the screen?
Yeah. If we can do that. Apologies.
Partly because
Yeah.
we wanted it for the record.
Yeah. Sorry, thank you. Sorry. Okay, it's this one that I wanted to call out. So this is the text of 100A. So it's clean from what was posted yesterday in track, and then with an edit based on this morning's discussions. So this was the requirement that we had talked about that would replace the requirement that at the start of the week was two requirements, 98A and 99A, so that it now is a requirement that indicates that it is. I'll let the board a few minutes to read it for a second.
Well, in fact, we should read it into the record.
Okay,
So go ahead.
It now says, if a matter related to going concern, other than a material uncertainty, is disclosed in the interim financial information, and in the auditor's judgment, the matter is of such importance that it is fundamental to users' understanding of the interim financial information, the auditor shall, in the separate going concern section required by paragraph 98, include, a reference to the related disclosures in the interim financial information, and a statement that the auditor's interim review conclusion is not modified in respect of the matter. So this was to address the concern that it might not have been clear that these statements, these references and the statement are in the going concern section that would have already been applied.
I think that's a cleaner solution. Reads well. Any comments? People happy with that?
There were a handful of other editorial suggestions that we made. I'll go back purely because it popped up earlier on screen to this one. I'm sorry, I can't make it bigger, but so it's in 42 little d, sorry, which was a suggestion partly for clarity, to clarify that the lead-in of the text. So it says, the auditor shall inquire of management and others within the entity as appropriate about, and originally D started with the word regarding, which would have been about regarding as the flow of the sentence. So now it says, the auditor shall inquire of management and others within the entity as appropriate about significant accounting estimates, including, and the rest is unchanged. And in E, the change was for streamlining and just to focus. They were unnecessary repeated words, but so we see that as an editorial only. That just now says, instead of including the need for new, it is including new, because that is what the intent of the requirement had been.
Okay.
There were a couple of other word changes, but they are not of substance, so I don't think that.
They would fall in purely editorial categories, which is you'll have some final cleanups before we put everything out, so.
Yes, and for those of you who have asked about cross-referencing numbers, all of that forms part of our final renumbering process, so we will pick those up.
Okay. Anyone want to raise any other comments or concerns before we go to the formalities here? Okay. Vili, I'm turning it over to you.
Thank you, Tom. So I just want to quickly, for the record, address the items that is in section C of agenda item 2 regarding due process. So there's a number of matters highlighted there. I just want to sort of draw out the key points on each of them. The first is about the exposure period. I think we already had a discussion on that on Monday. So just confirming again that we propose and we will go out on an exposure period for 120 days because of the reasons as explained in paragraph 17. In terms of the proposed implementation period, so as part of any exposure draft, one of the questions that we do pose to our stakeholders is whether they are in agreement with the proposed implementation period. So that would be the period between the effective date of the standard and when the between the approval of the standard and when the standard becomes effective. So we have proposed in paragraph 20 of agenda item 2 that we will propose an exposure period of 18 months after approval, which is sort of our standard, 18 months after approval of the standard to the effective date. We did indicate that a relevant factor here would be also to consider when 240 revised and ISA 570 revised 24 becomes effective. But I think that is appropriately accommodated because with an 18-month implementation period after planned approval, you're probably looking at an effective date around December 2028, which means the other two standards would have already been effective for 2 years. So we believe that strikes the right balance. And then lastly, just 2 things to confirm on the record. In view of the project team, the significant matters identified as a result of deliberations since the beginning of this project have been included in the issues papers presented to the IAASB for discussion. And in the view of the project team, there are no significant matters that have not been brought to the attention of the IAASB. Also, the project team does not believe that a consultation paper or field testing is needed at this stage of the project, as development of proposals of 2410 leverage existing standards and guidance with input from various stakeholders throughout the development of the exposure draft. And in addition, we will have an outreach plan for the exposure period and even after the exposure, after the ED period closes. So thank you, Tom. That is all the due process matters.
Thank you, Vili. Before we go to voting, I just wanted to ask Dave if the PIOB has any observations or considerations for us before we do vote.
Thank you, Tom. The only thing that I'll say is, well, first of all, thank you for letting me participate in the meeting and to hear the deliberations. I look forward to the vote and to the feedback from stakeholders. But I think in terms of addressing the public interest issues, as I said the other day, I think the project team and the board has done a good job of addressing those items. Thank you.
One of those public interest matters, which will be part of the EM, I believe, is coordination with IAASB and the related topics. So I just wanted to make sure that people were aware of that, that that's not explicitly part of the drafts that we have in front of us. Anyone have any objections to voting on this exposure draft right now? Okay, great. So is everyone clear on what we're voting on, the 2410 exposure draft? Good. I'm going through all the formalities here. Okay, so we're gonna take a vote on this exposure draft, and just based upon the discussion around the room, I'm just gonna go right at who's voting to approve this exposure draft for public comment. Okay, So we have all 16 votes, including Sammy on screen. Thank you very much. That's well done. Congratulations to the project team, Anna, Dan, Sharon, Joanna, Misha, Renee, the PBMs, Robert and Wendy, and for the board, Billy, what's our next steps?
So again, Tom, we will publish the approved text on the meetings webpage as soon as possible. Obviously, that will still have the paragraph numbers in as you saw them this week, because the cleanup of those numbers will take a little bit of time. The team will then progress to clean up the standard. Like Tom said, we'll do some internal consistency checks, references, maybe 1 or 2 editorials, whatever. We'll clean up the standard, and we will also complete the development of the explanatory memorandum. The explanatory memorandum, so please watch out for your emails. Somewhere in April, we'll send it along. We will clear the explanatory memorandum offline with the board, as we always do. And then the plan is to publish the exposure draft on May 6 for 120-day comment period until September 3. Yep, that's the next steps.
Great. Well, many thanks to the team. Well done. And look forward to stakeholder comments. Just a reminder that this is a project that we were asked to do as a priority since 2410 was not subject to the Clarity Project and had become quite outdated, yet was used in a number of jurisdictions as a statutory requirement too. So this is an important step. Okay, let's get the technology team to the table. Give everyone time to bring up their papers. When we met last, we had a support for the general approach being proposed in the action plan, but there was a desire to create some flexibility to assist in the agility of getting useful guidance out to the marketplace. And I think that was the key theme, is that we got these, at that time, we were calling them Guide 1, Guide 2, Guide 3, which is the right areas, but there was a desire to sort of be more flexible and getting the materials out. And so I think the team has tried to be really responsive to those comments without totally changing the construct of what we were discussing over the last few days. So Angelo and Isabel and Sachiko and Ida, welcome to the table. I think you guys have done a really nice job turning the documents around. And I'll hand it over to you.
Okay, thank you, Tom. I wonder if everybody can see what's on our screen. Can we? Thanks, Tom. That was helpful. If we can blow that up as much as we can, that would be great. Okay. Sorry, I'm just going to need 1 minute while I find my place, and then we'll get started. Just 1 second. Sorry, folks, just 1 more minute while I find my place. Just 1 more second. Okay. Okay, I think I found my place. All right, so the first document, as Tom mentioned, is our approach document. And the approach doc, and I'm gonna, let's go to paragraph 14, please. And thank you, Taylor. Okay, this paragraph was just updated to respond to a request for more specificity just around how the catalog is being updated. So I'll have you have a look at that. I should also mention, Tom and board, we didn't receive any visitors during office hours. So important to note that what we have here are the changes that were sent out yesterday. So, sorry, this morning, there was a little bit of a hiccup, but the PDF documents that were actually distributed yesterday were up to date. So what I'm going to walk you through is some, just at a really, really high level, some of the biggest change. I'm not going to walk through all of the little editorials, but what you see in 14 is just more specificity around what does a change to the catalog actually mean? And that's what you have there. Okay, so let's move to the next one, which would be on paragraph 19, please, Taylor. Okay, all we did here is that we added a reference to the ISA for LCE. That was missed in our first pass. It's clearly an assurance standard, and it was added. Okay, let's move now to paragraph 29, please. Okay, this sentence that was added to paragraph 29 is responsive to a comment that was made by James Gunn. NAM is clearly not a replacement, an alternative for standard setting where standard setting is ultimately required in the public interest. This sentence was stolen from the PIOB public interest document, and we tried to make minimal changes to it just to make it absolutely clear that it's coming from the PIOB document, and we fully concur with that. So that's what this sentence is doing. Why don't the next, let's second. Oh, sure.
Can I just make a suggestion for the process? Because we were all part of the discussion when the comment was raised, so we don't need to have it explained why it was raised and how it's been resolved. We've all been able to read it. So can we just go through it section by section and ask the board members whether they have any supplemental comments or any comments with respect to the above? Because I don't see the point in just you explaining what changes have been made on at the moment, every single change basis.
I'm very cool with that, Ado. Absolutely. I will explain at a really high level. How's that?
Okay.
And should we open it up by section? Is that what the proposal is? Sure.
Yeah, we're almost done through this.
Yeah, there's very few here. So let's say for section 3.1, again, the changes are there. You've reviewed them. I guess what we can do is we can open it up if there's any questions around any of those changes, recognizing that nobody visited us during office hours.
Anyone? No, I think we're
perfect. I should also mention for paragraph in section 4.2, although I'm not going to get into the specific changes at a really, really high level. In Taylor, if you go to paragraph 43, this paragraph was in fact enhanced to really emphasize that the IAASB is committed to partnering with other organizations, and even where it's appropriate, referring our stakeholders to really good, credible work elsewhere. And that's what those changes were. So if there's no questions on section 4.2, I think we're almost there. There's one footnote that I want to draw your attention to very, very specifically. So let's do 4.2 first.
I don't think we have any. So you're gonna to the footnote.
Footnote. This one's an important footnote. If we go to the footnote in 12, Taylor, please. So it's footnote number 12, and it is under
Bottom of
paragraph
page
51.
11.
Yes. Page 11. So Dave, you'll recall that Dave made a comment about how the document wasn't referring to the public interest framework, and we certainly thought that it made a lot of sense to put a footnote here to in fact reference the fact that our channel for development for NAM will be taking on elements of the public interest framework, due process elements as part of that development process where it's applicable. So that's what that footnote is purporting to do. And Tom, that brings us to the end of this document. Maybe we can.
Any comments on the proposed changes? Okay. I think we can move on to the next document.
Perfect. Okay, Taylor, why don't we go to document 3D now and take it all the way to the top. So 3D, while that's coming up, 3D is a markup of 3B. It's the action plan. There's some more significant changes here, and I'm going to walk you through at a really high level because I think you would benefit from some of that as it is, what were those changes? Okay, so take your time, Taylor. Okay, something's coming up. Wonderful. And Taylor, if you could take us to paragraph 23 and blow up that document as much, that's even better. Yeah. As Tom mentioned, we've made the construct that we had brought to you was one guide equals one layer. And that was creating some practical challenges for us because it seemed a little bit too rigid. So we made edits to, in fact, sever that connection, one guide, one layer. Now, and Tom had proposed that we call each layer a theme. Within each theme, there's going to be a bunch of topics. Remember, the layers are that technology stack: foundation, tool layer, engagement layer. So within each layer, there's going to be a bunch of topics, and each topic will attract a guide. And in fact, the guide could be as short as 3 pages now to address a particular topic. It gives us the ability to do quicker wins, get quicker out to the market. So that's what all of what you see here is really reflecting that. And what we can do, Tom, I believe, is we can take it by section. I think the scope section is the one that attracted the most changes. And in fact, subsection C of the scope section to see if anybody has any questions on that.
Wendy.
So thank you, Angelo. I actually don't need to go section by section. I think overall, I applaud the team for taking in the comments that were made in the session earlier this week. And I like the changes in particular that were made in this section, plus the comments that were made for themes versus individual guides. So thank you.
Maybe I'll use that as a jumping off point. Are people happy with the proposed changes here? I think that directionally, one of the things I think people really are going to be looking for is what is the meat behind these themes, right? Like they're going to want to see tangibly what we're going to do. And so the quicker we can get that out there to be less abstract, I think it will be really helpful to the marketplace. So, but I think we now have the framework for doing that. And my sense is that people are supportive. Is that fair, Ada?
Well, I certainly am, but I also wanted to make the comment that the other thing we've severed is that we're now not restricting ourselves to first publish something on team 1 and then team 2 and then team 3. Based on the prioritization that will be discussed with the expert group, we can also have a guide out on theme 3 in the next quarter. So it's not this, the overall flexibility of the approach has been significantly improved, which I'm entirely supportive of. So thank you.
Right. But we're not gonna reduce the output either as a result. We're not gonna use the flexibility. Nancy?
Quick supplementary. So the other thing we heard is about time to market, right? So the team is going to get working, basically, coming out of this meeting, forming the expert group, and then starting to develop some material as we formulate this list, the list of topics that we're going to address. So in June, you'll probably have a fairly meaty chunk to sort of go through.
Okay. Anything more to say on these? I think people are pretty happy. Amara?
Just to reinforce, I'm really happy with the direction here, especially because I see the three teams sometimes in one guide, depending on what we are trying to achieve. So it's making me really satisfied with the way we are putting it now.
Great. So I think unless you have anything else to say, I think we're ready to approve these two documents. You against that? Or are we ready to go? Great. Before we do that though, Dave, just want to turn to you to make sure that we capture your observations.
Well, thanks, Tom. And yes, I think that the project team had caught the observations made by the public interest, the PIOB. And I know that there's a real demand for this in the marketplace. So I think it's going to be a good project.
Okay. Does anyone mind if we approve the approach and the plan document simultaneously? Perfect. So we're very clear that we're voting on both. Again, just using chairman's intuition, I'm gonna seek the votes in favor of approval first. Those in favor? Okay, good. I don't have to ask for any other votes. 16 board members, congratulations to the team. I have to say the hard stuff is really about to come, but I think you should feel proud in terms of all the work that you've done to get us here. And I know we've been doing a lot of work in the background as well. Billy?
So Tom, for this one, the same as for the 500 series, the final text will be available on the website after this meeting, and we will also post it on the project page. So for all availability of all our stakeholders.
Okay. You believe it. One, my voice is mostly survived today. And two, we're done with the business of the week's plenary meeting. So congratulations to all, great success, and a real thank you to the whole team for making this such a successful meeting. Just a reflection about not letting people off too easy. I'm told the work is not done for the audit evidence and risk response team because they're going to be meeting in the green room immediately following this session. And the 500 series project team will be meeting in the orange room. And then for all of those who are leaving but want to relive this board meeting, the draft minutes of the meeting will be distributed shortly and posted for approval at the June board meeting. Now, as I said, May 6th, we had a couple of time slots held for a video conference call. We will likely use one of those time slots. We probably won't use both of them. We'll confirm that the timing very shortly. But I will say it'll be much more like a targeted session, like what we had yesterday in terms of 2410. So we're not going to have a big long read. Papers should be short and sweet, but there probably will be a few issues that we want to bring back for the board to get immediate input. And then obviously there's going to be a lot of outreach in the lead up to our June potential approval of those standards for exposure. you did receive earlier this week some information, but reminder, just we will be meeting in Mainz, Germany, June 15th to June 18th. If you haven't booked your accommodation or flights, please do so quickly. Really want to thank Wolf and the IDW for all their support and organizing, and Robert has been instrumental as well. But thank you very much. We very much look forward to our June board meeting, where it seems long away, but it hopefully will be good, glorious summertime at that point. The posting for our June board meeting will begin probably around May 25th. But we expect all materials to be ready by May 29th. We've been pretty good about that lately, so that's great. I'd like to thank all the TAs and the observers for their contributions to this meeting. They working, the TAs in particular, making sure that everyone's prepared and also helping us out on a lot of projects these days. So thank you very much for that. Thank you to all the board members. And obviously the staff team. I think we really see how this staff-driven model is working well in action. We're actually really about to see the fruits of their labor come out with these EDs. There's a lot of work to go, but really pleased with how that's progressing. Before we close, Dave, any final observations for the week?
Tom, let me just say thank you for including me in the meeting and letting me participate this week, and congratulations for all that you've accomplished over the last several days.
Thank you, Dave, for that, and thank you for being with us this week. We've appreciated your input. And then I just want to thank all the observers who've joined us throughout the week, either in the room or on YouTube, for observing, and thank you just to everyone for all their hard efforts, and appreciate your continued support of the public interest here. I think we're on a really good path. We have important work. We won't be complacent, and we certainly will be dependent upon the input of our stakeholders as we reach important points on all of these critical projects. So I'll ask you to close the meeting now, Taylor.